A new week just started in the synthetic market. In case you trade them, you well know that the market closes on Saturday, and by Sunday, a new week has started. So today, being a Sunday, as I'm recording, this is a Sunday. You have to be preparing for the new week. You can prepare it on Saturday or Sunday. I prefer Sunday because the weekly candle has closed and decision making is easy. Because I very much like the weekly time frame because it gives me my structure, right? So if you're going to be trading synthetic indices, make sure you understand that the lot sizes are different. Like I'm going to be going through different synthetic indices. The lot sizes are different. So in case you're going to trade a different synthetic index, make sure you check the lot size and adjust accordingly. Otherwise, you can easily lose your money because they're very volatile. Now, there are a couple of synthetic indices we're going to be looking at, and I want to show you how you prepare for the week and how you determine which key levels you should be taking your trades at. And I'm going to be using examples, or I'm going to be using setups, and we're going to be doing a breakdown of the next moves of these synthetic indices, also basing on what I've previously shared with you guys on the social medias. And kindly, if you're not following us on social media, make sure you follow us on Instagram, TikTok, Facebook, because we post there almost every day, not every single day, but almost every day, so that you can see how we implement what we're teaching you here on our channel. So without wasting time, let's start off with v75. Now, v75 is the one I trade. Just maybe to give you my advice or my thought for the years I've traded, make sure you have a watch list that doesn't have more than 5 securities that you're going to trade, whether it is in Forex, whether it's in the commodities market or synthetic markets. Your watch list should not have more than 5, but you should not trade more than 1 security at a time. For example, I trade mostly 99% of the times, I'm trading V75. That's why I understand it so much. Like I know what it's going to do. I know how it changes trend. I know what candlesticks it makes when it's going to reverse. I know the levels it respects mostly, right? So of course the markets move the same way, but you need to understand something more so that you get deep into it. It will make your trading very easy. So we're going to start with V75. It's my favorite. All right. So remember I mentioned V75 that we are targeting over 6,000 pips. And what structure are we trading? We're trading this monthly W here. And we properly know that the rules of a W, when the market breaks the neckline, we want the price to come back to this neckline. So we're trading this reversal here, and the market has come exactly where we wanted it to. Now it has of course crossed a bit. I'm just going to make the chart very clean. Let me just create. I'm just going to make the chart a bit very clean so that you can see it, right? Now, remember, I gave you targets. I gave you this target here. I gave you this target here. I said this was the first target where the market reacted again here. Then I told you my last target was this one. So I have exited this trade. I don't know how many of you traded it up to here or held up to here. I know most of us cannot hold trades for long, but at least you should have used, because I've been updating on this, right? So this was the target that I was looking at. Now, we have to also mark a resistance because we tested this. So the market most likely may either break and continue down, or it may want to come back and do what we call a retest. So we do have this area here, which is very, very key, 43 level, right? So these are the 2 levels I've got in the monthly time frame. Now, these are in the monthly time frame, you're marking levels for directional purposes, right? If you want to use them to adjust them in the other lower time frames, it is up to you. But monthly, you're just looking at the direction. For example, we had to identify the structure here. We had the W. So the direction when we're up here was to come down. So now that we have come down, the direction is for us to make a slight retest, or even to make double tops, or even to go higher. The outcomes of a W are, when the market makes a W, we expect a retracement, then higher high, or when the market makes a W, we expect this retest here, then to make double tops, or the last one is after this retest here, we can make a lower high. So we expect either this outcome or this outcome or this outcome. Are we together? So that is it. Now, when you go down to the lower time frame, right now I know that I'm supposed to be looking for buys. That's the direction monthly is giving me. But it doesn't mean that I should start buying immediately because it has touched the neckline that I want. No, right? So when I come down to the weekly time frame, what do I observe? In the weekly time frame, very interesting. It's aligning perfectly with what I want to see in the monthly time frame. What do I mean by that? I mean that the market has created for me an M. Remember, monthly we have a W and we have reached the neckline area. Of course, we are slightly below. The rule says that we're supposed to go upwards. Now, in the weekly time frame, what do we see? In the weekly time frame, we do observe that we have an M. This W is saying we're supposed to go upwards. We're here, we're supposed to go upwards. Now, this one is saying that we have an M here that we need to come to retest the neckline. You can see they're both communicating the same thing with a different structure. So monthly and weekly communicating that we need to be looking for a change of trend to go upwards. So if you use weekly for a structure, now, like personally, I love trading when the market is going to retest structures like W's. That's why I was very sure the market was going to come down after seeing that W in the monthly. Now that I've seen an M in weekly, I am very certain the market is soon going to change trend from around this area to go to the neckline area. Are we together? So that is it, what we see here. Now, when you go down to the daily time frame, before I go to the daily time frame, you can slightly adjust. Let's go to line chart. We have some hidden levels here that the market is showing us. We have that level there, and also we have this hidden level here that the market is showing us exactly where the price is approaching, right? So when you go back, you can see the market is still has some small distance to cover before touching there. And also we have this demand area that the market is showing us here. We have this demand area, and also we have this demand area. So the market may want to slightly push lower to grab people's liquidity, those who are buying early without understanding change of trend, before going to test that neckline, right? So you have to be patient and follow all the rules. When you go down the daily time frame, what do you observe in the daily time frame? Now, the daily time frame is very interesting because this is where intraday guys get their levels from, and it's what most of you are losing money from. Now, our demand level in daily is this area here, which the market needs to tap into. Okay, we're already into it before we start pushing higher. Now, if you've been following our social media, I've been speaking a lot about this daily level here. The market had to come and test this level. It came and tested it. Now we have a level that is not tested. This area here is not tested, right? Even if we want the price to come here, but synthetics being synthetics, because they have to grab liquidity, there's a higher chance that the market, when it changes trend, it may not only stop here, it may actually go inside here, because we also have this structure that is not tested. So if you look at monthly, weekly, and daily, all the levels are suggesting that we need actually to go high. But the question is, are you just going to go high to start entering buys because the bigger time frame are suggesting so? No, we have to check the next lower time frame. So we have marked this area here. We have also this area here, which is aligning with this level here. Now, when you go to the H4, if you've been following the social media, I made an update saying that there are two options. Either the market is going to bounce off from here to come and test this level here, or the market is going to break, retest, and it drops to 38 level, 38.4, which we have broken. Actually, it was around that neckline area that I marked. It has broken the level, right? So most traders, when the market touches a key area, they start looking for buys. Now, if you check, the market, of course, reacted on that area, reacted a bit, but you can see the momentum is not for a buy. So the market is making lower highs, low. It has still not changed trend. We need the market to stop making this lower high, lower high, low, actually equal lows here, low. But the moment it turns to start making that, that's when you take a trade with these levels here. So those who trade V75, the key areas that you should be watching out, we have this area, the prices that is approaching. Actually, you can mark a slab just here where the price is coming to, this area here, into this area. So you look for change of trend here. If not, you can wait for the market to come and make a retracement to this level here, give you a higher low or even a slight low, like I told you guys, the entry low. When it breaks back above on a retest, if you're a risk taker, and if you're not a risk taker, wait for the market to actually start trending fast. Then you can start taking your trades above these levels here. Continuations are very easy. Now, that's for V75. I hope you guys have seen the levels personally I'm targeting. I'll be targeting this area. When the market crosses above, it will be coming to this area because this area here is not tested. Just as simple as that. You see the chart is very clean, right? So, excuse me. Now, when you come down, when you go to V100, I've also spoken about V100. Actually, just check Instagram, TikTok, and Facebook. This was posted, these levels here, but I'm just going to do the breakdown afresh, right? So let's just look at the weekly time frame. I've also spoken about it on the channel before. Let's start from the weekly time frame, whereby I like getting my structures from. If you to observe weekly, we have a market that came and broke above this level, and also we have a market that came and broke above this area here, right? So when you go down the weekly time frame, you can clearly see that the market is making highs, lows, highs, lows, highs, lows, higher high, higher low, higher high, higher low. So why I made that level, why we had the level here is, this level here is because this was a high that the market had to retest, and indeed came and retested this high here. You can see the market came and retested it and went up, but failed to take out this high. So when the market breaks below, you're looking for a retest. And that's the retest that we spoke about. Now, there's no proper retest here yet, but for intraday and trading until this retest, because we're expecting the market to come and retest this level that we have marked. Why? We have a confluence that the market retested this area, but in the process, it left this area here untested. I spoke about it in the previous time. I spoke about synthetic indices on the channel. You can just look out for it. So we have also this level where the price is. If the market closes below on a weekly test, you can take your trade from here up to down here. Though, remember, keep in mind that this area has not been properly tested, but it has been tested if you go to a smaller time frame. So you can take a trade knowing, keeping in mind. I'm just going to mark it here. Someone may be saying, but it's not tested. When you go to the lower time frame, this area here was tested, but it's not a proper retest. The price has to come back there. So assuming that you open your chart the following day, we have a lot of structures holding prices. So on this week retest here, and this momentum here, you can easily take your trade to continue with it. So in case you did not take the trade here, or you didn't watch our social media breakdown, it's simple. You can simply wait for the market to close below this area here. Especially, I love it when it closes in daily. At least if I'm doing intraday, when it closes in daily, then you know that you're targeting your next low. But our best place when you're looking for a continuation is one price to come back into this area. Then we can maybe look for a push higher. But for right now, you can see the market is moving downwards. The momentum is aggressively downwards. So option one, if this level holds price, because we're at a very key area, it holds price today, then we may have a pullback either into this area here, right? Or slightly higher into this blue zone, then we can come back down, right? But the market is an uptrend. You can see higher highs, higher lows, higher highs, higher lows, right? But we have a demand area that is not properly tested that we want price to come back to, right? So if you trade v100, I hope this makes sense. Even in H4, you can clearly see the momentum currently is so bearish. We posted it on time. The market closed down here, I think around here, and gave us a pullback into hidden structures. That's why it didn't touch exactly here. Then it started dropping. So if it closes below, weak momentum, and if it fails to take out this area for today and accumulates to give us a push higher, because the market has made a low, lower high, low, lower high, low, lower high, low. If the market comes, it tests here and gives a change of trend to come back here, you can still look for a trade to go up with it in case you trade reversals, which I don't advise if you don't have solid rules. So those who trade V100, I hope this clearly makes sense to you. And then let's also look at step index, which also I've shared. These are the same setups that I've shared. Now, just to save time, let's do starting from a daily time frame. You can start from monthly, but I just want to show you how we came up with this. Now, okay, let's just look at it in general, right? Now, when you go to the weekly time frame, what do we spot in the weekly time frame? In the weekly time frame, we can clearly observe that the market created an M, market went and tested it. This turning point was broken. The market came back, tested it, broken the low, came back, tested it, broke down. The market came, tested it, and it broke up. But in the process, we have an area that is not tested there. We have this neckline that is not tested. So those who trade step index, keep in mind that we have a region here that is not tested. So I'll mark it like this. Are you getting it? Now, so when we go down to the daily time frame, this is how we came up with that level that you saw at the beginning. Now, also, we have an M up here with a hidden structure broken. So we said, I made this breakdown and posted it on the social media. Please make sure you follow if you want to follow for almost daily breakdowns, right? So we had an impulse here, Fibonacci. We have a topic on Fibonacci, how we exactly use it. And we said that this area here, the market needed to come back into this area. You can clearly see it's where the price came back to. And also it was aligning, this same area was aligning with this. There's a hidden structure here. So it was perfectly aligning with this Fib area. That's why I see the market gave us a push for 3 consecutive days. And today we're having a pullback. Now, in case someone did not catch this trade from here, where is our next opportunity that someone could use? Now, we know that the market is supposed to come and retest and then it pushes down. But to where? To this area here. Though personally, I know most people will be focusing on this neckline here. But personally, I would be interested in the price coming back down here. There's a hidden structure that we have into this area here. So I think the market is just making a pullback to continue this move down. You can see the momentum upwards was very weak and it gave you a push downwards. Now, what do we observe here? We observe that the market actually is testing some levels here, then it continues lower, unless otherwise. So let's check what my favorite entry time frame is doing. You can clearly see that the market has been making lows, lower high, low, actually equal lows, lower low, lower high, lower low. So you can clearly see the market has come to test this area, though there's a problem here. It is slightly above this structure. If it can break below, then on the retest of this structure, we can continue, right? Let it break below this structure. Actually, let it to break aggressively below this area here. On a week retest of this area here, then you can continue the trade downwards. Otherwise, it's still above this structure. It can easily come back into this area here. So you have to be careful where exactly you're trading or you're looking for your entry rules from. You don't just look for entry rules from anywhere. So these are the levels for people trade step index. Then V25. Now, V25, I don't know if the people who trade it, it's not very widely traded, this one here, but these are the levels that we do have. Currently, the market is, you can see it's making higher highs, higher lows, higher highs. These are levels that were not tested, that I identified. And I still expect the market to come and test this area here, because the market created an M and never tested. You can see this was a strong push and left this area not tested. So there's a high chance the market is coming to test here before coming down to test these untested levels. Of course, we have a structure here that the market may first play on to react. If it breaks it, then we shall have the market coming back down to these untested levels. So you can just look for the change of trend in your entry time frame, which I prefer using H4 because it has less noise. You can clearly see it's a bit losing momentum, but still in an uptrend, right? The market is making just equal high here, higher high, retested. So we have broken this high here, tested. We have broken, may come and get retested. So if you're doing intraday, you can easily look for the market to break above. When it comes back to retest weekly, then you can look for trade into this zone here. So when it changes trend from moving upwards, maybe creates a certain structure, breaks it, and starts moving downwards, then you can trade. Your first target should be this line here. Then when it breaks it on a weekly test, then you can take your trade lower, right? So allow me to stop here for the purpose of making the video short, but I hope you guys have gotten exactly how personally I get my key areas. What I mean by key areas is an area where I'm going to put emphasis on to start looking for my rules of entry. Key areas can be areas of interest or areas of entry. Remember, for you to get area of entry, you have to first have area of interest. So this is how you prepare for the week if you're trading synthetics. It's the same method you do for normal markets, but I think we shall be doing the normal markets in the next video, which we shall be, the team will be posting once we look at the market. Today is a Sunday. We may look at the markets today evening, and then maybe you'll be availed with what we are thinking about the markets for the coming week tomorrow or in the next few hours. That is it. I hope you guys got value out of it. Have a great day.